Good afternoon. Happy New Year. Welcome to the Pancon Resources live town hall meeting webinar. It is being recorded and will be made publicly available after the meeting. My name is Layton Croft. I am President and CEO of Pancontinental Resources, or Pancon Resources. I am joined today by Pancon's Senior Strategic Advisor, Mr. Keith Laskowski, and our Manager of External Relations, Ms. Janie So. The purpose of today's webinar is to discuss our company's plans for 2023, for which we are very excited. First, I want to ask Janie to cover some basic housekeeping. Janie?
Yes, hi everyone. Just a reminder that this call is being recorded and that this presentation includes forward statements, which are based on opinions and estimates of management and are subject to a variety of risks and uncertainties. During this call, everyone will be muted, and if you are on the online version, feel free to keep your cameras off. There is a chat box in the bottom of the screen. You can submit your questions and we will read them out loud after the formal part of the presentation and get Keith and Layton to answer them. You can also raise your hand by pressing the waving icon at the bottom of the screen during the Q&A session, so we can bring you in live to ask your questions if you wish to do so. We'll try to keep as close to the allotted time of this call as possible. And if in case we get a flux of questions, we will try to answer as many of them as we can. If you are also, just letting you know as well that we are also available for one-on-one calls and meetings after this call. If you wish to do so, just email us a request of the meeting at info@panconresources.com and we'll schedule a time that works. Without further ado, Layton, this stage is all yours.
Thanks, Janie. And I apologize if there's any glare in my glasses, but I need the glasses. All right, so I'm going to start with some opening remarks, and then Keith and I will go through a short presentation, and then we're going to take questions. First of all, I want to clearly articulate our company's value proposition. We believe the Brewer Mine property has exceptional potential to host a significant deposit, and that the Southeastern United States is an underexplored, highly mineralized terrain that is ready for modern exploration. This value proposition is why our company exists. This value proposition is how our company will create value for existing shareholders and for new investors. I believe in our value proposition now more than ever, since I became president and CEO in April of 2017. My purpose is to serve the best interests of all of our existing shareholders who invested in Pancon over the years, and to attract new investors so we can realize the full potential of our value proposition. To that end, on Thursday, February the 2nd, we will hold a special shareholder meeting to vote on two things. One, consolidating the company's share structure on a 10-to-1 basis. And two, changing the name of the company to Carolina Rush Corporation. Let's talk about the consolidation. Why are we doing a share consolidation now? If we have such a good story, why don't we just go out and raise some more funds? The answer is, we currently have a low share price that would make any new financing difficult and highly dilutive, if even possible. The truth is, new investors are reluctant to participate in financings where a company has a large outstanding share position. As announced this Tuesday, January 3rd, we have identified some very strong drill targets and extensions of known mineralization at our flagship Brewer Gold and Copper project, which we are excited to resume drilling this year. Then, as we announced yesterday, January 4th, in this news release, We intend to apply our experience at Brewer and the Southeastern United States to acquire other high potential gold and copper projects in the Carolinas region. The purpose of our February 2nd special shareholder meeting is to change the name and consolidate the share structure in order to attract strategic investors to help us fund our exploration program, to strategically add to our project portfolio in the Southeastern United States, and to strengthen our management team with the addition of more technical expertise and executive experience. We are explorers. We work hard. This is hard work. We take risks. We work in a risky business. We use science and prudent management to minimize risks and maximize opportunities for business success. Now, I know some shareholders don't like share consolidations, and I respect their perspective. However, the way forward for our company is to reset, refresh, and renew. That is what we are doing. Voting yes for the consolidation increases our ability to complete a reasonable financing that will allow us to advance our essential exploration work and achieve the potential value we have identified. Voting no for the consolidation increases risks to the company's ability to continue. We are focused on the future. Just for a moment, however, I want to briefly look back to the past. Exactly 3 years ago, at the beginning of January 2020, our company had a market capitalization of 1 million Canadian dollars. We were bidding against some big heavy hitters for Brewer. Most people thought we would not win the Brewer tender. I always believed we would win. And then what happened? We won. And then we raised money twice in 2020, once in 2021, and once in 2022 to explore Brewer. We have achieved excellent drill results. Today, we know more than ever about the complex geology at Brewer and across the region. We want and we need to resume drilling our very exciting targets. Unlike 3 years ago, today we are not bidding for Brewer. Today, we are bidding for the future of our company. We have built strong interest to recapitalize the company under a new structure, which will help us continue exploring Brewer and help us strategically expand our asset portfolio on a regional basis. Today, our junior exploration company has a market cap of approximately 7 million Canadian dollars with no 43-101 compliant resources in the ground. Other junior exploration companies who have more than 1 million ounces of resources in the ground have similar market capitalizations of around 10 million Canadian dollars. What's more, there are plenty of junior exploration companies with no resources in the ground, but with market caps of between 20 and 50 million Canadian dollars. All to say, our company has recognized resource potential that is attractive in terms of our value potential. Now more than ever, our company needs resources in the ground to create more value for shareholders. If 67% of voting shareholders at our February 2nd special meeting approve the name change and consolidation, then we, as Carolina Rush, will plan to raise new capital to resume drilling at our flagship Brewer Gold and Copper project. Brewer will anchor our Carolina Rush vision to be the leading explorer in the Southeastern United States. We will apply our strategic exploration model and experience at Brewer to acquire other high potential gold and copper projects in the Carolinas region. We will strengthen our management team with the addition of more technical expertise and executive experience. So to sum up my opening remarks, I want to thank you. Thank you for your interest by attending or watching this webinar discussion. To existing shareholders, thank you for your investment. Thank you for your trust in me and in our excellent team. If it weren't for all Pancon investors in the past and for all existing Pancon shareholders, we would not have the amazing people and the amazing opportunities that we have right now. I believe, I am committed, I am passionate, I am determined. The future can be bright. I, for one, believe it will be. Thank you. Those are my opening remarks. I'm now going to pull up our corporate presentation for this webinar. And I want to ask Janie to tell me if it's showing. I don't think it's showing yet.
Not yet.
So I ask you, dear listener, to bear with me. Going to make sure it's showing. All right. Let's see. Is it showing now?
It is showing now.
All right. So what I would like to do is, first of all, I want to introduce Keith Laskowski. Keith has been a strategic advisor to Pancon for more than a year and a half now. Keith is a mining geologist and a mining executive with 40 plus years of global experience in 40 countries in the discovery, development, extraction, and financing of mining projects. Keith spent 17 years with Newmont Exploration as senior geologist and regional manager, including working in the Carolinas region. From 2012 to 2015, Keith was principal mining specialist with the World Bank's International Finance Corporation. Since 2015, Keith has been VP Technical Services for Sandstorm Gold. Keith is president and owner of Yellowstone Geological Services. Keith earned his BS from the University of Maine in geology and his MSc, Masters of Science in Geology from the Colorado School of Mines. Keith is based in Bozeman, Montana. So Keith, welcome to the webinar. And if you want to add anything about yourself, please feel free.
Thanks, Layton. Just want to say hello to the shareholders that may be here, and it's a pleasure to be here. That's quite an introduction, and I guess the only thing I hope that's transmitted through all that is that my interest here is purely in the geology and the gold potential of Brewer, and I'm here to support Layton and the team in any way I can.
Thanks, Keith. You spent time back in the 1980s, I think, in the Southeast, right?
Yeah, that's right. Out of college, I ended up going into the uranium business with Kerr-McGee Resources, and then the market collapse there put me out in the, not on the street, but in the market at exactly the same time the price of gold took off. And so my first gold project was in the Southeast US, again, working for Newmont Mining at that time. And so, yeah, I spent about 3 years looking at all the major prospects from the northern tip of the Carolina terrain to the southern tip and out in Alabama, and had a chance to drill about 5 of these projects. So for me, it's a welcome return to work with you at Brewer, mainly because I've learned a lot in the last 40 years. And when I was first there, I sure didn't know very much, and there was not a lot of information about the region or the deposits, but I think there's a lot that can be applied to the new program here that will lead to success.
Great. Well, we're going to get into this presentation. We got a few slides to talk about, and then we'll take some questions. And Keith and I are going to talk through the presentation, go through the slides, and here we go. Janie, just to confirm, you can see the screen still?
I can.
Great. I just like to make sure. That's our disclaimer. So here we go. Pancon Resources introduces the future. Carolina Rush 2023. There are 3 things on this slide. I'm going to just go through them. The first one I talked about in my opening remarks, name change and share structure reorganization. The new name we're proposing is Carolina Rush Corporation, and we're proposing a 10-to-1 share consolidation. There will be a special shareholder meeting on February the 2nd. We put out a news release, which I held up earlier yesterday, January 4th, just announcing that the circular for that meeting has been mailed out. In the middle of this slide, it says currently Pancon's only project is the famous historic Brewer Mine. Brewer was an open pit gold mine, which has produced historically more than 200,000 ounces of gold, starting back in the 1820s. There was data compilation completed and new induced polarization or IP geophysical survey results. And we have exciting new targets that are ready to test. So we've got the benefit of lots and lots of years of data produced by previous operators, and then particularly the past 3 years produced and compiled and analyzed by us. And I just want to make a note. The first gold rush in all of North America was right here in the Carolinas in the 1800s. Now we know that in the mid 1800s, there was discovery of gold and a rush out to California. But a very important piece of history is that in the 1860s, there was a civil war in the United States. That is why the gold mining industry in the Carolinas stopped. It was not because of the depletion of resources in the ground. And so I just think when we talk about Carolina Rush, we're talking about the potential of the Carolinas. So there might be a new rush, but if there is, we're going to be on the front lines of that. The third thing here on this screen is greatly expanded program bringing modern exploration. So again, back in the 1800s, they did a great job, but we've got a lot more technology now and tools and means for successful discovery. So here it says explore extensions and new targets at Brewer. Resources, acquire new projects with immediate gold resource potential, and acquire a regional database and evaluate new target areas. So this is part of our strategy and our plan. Keith, do you have any comments on this slide?
Again, maybe from a personal point of view, when I first came to the Carolinas, it was the infancy of the modern, what we call the modern gold production period in North America, post 1800s, but you know, it started after the U.S. changed its fixed gold policy. At any rate, the point is that every major mining company in the country rushed into North Carolina, South Carolina, Georgia, Alabama, and looked at the historic occurrences, but they were successes. But then the exploration shifted to the Western U.S., and very little has been done since that time. And that's the reason we look at this as an enormous opportunity that over the last 40 years, the mining industry has evolved into different trends, different regions, different acceptable practices, different requirements. But when you stop and look at the basics of the Carolinas, the geology is, we believe, has the same potential as any major producing district in the world. It's not been tested to the same level as the major districts of the world. It has spectacular infrastructure. Nunavut right now is a wonderful place because of the potential, but it's very expensive to go to Nunavut. Carolinas are very low cost area to operate in. And we think that we can take the modern ideas that have been developed both through technology and science and apply it in the Carolinas here and advance very quickly to some major discoveries.
Thanks, Keith. I'm going to move on here to slide 4. So we talk about a consolidation on a 10-to-1 basis. These are some pro rata numbers. So you can see here, there's 3 columns. The left column is capital structure. Middle column is as of December 15th, 2022. And the last column is post-consolidation, assuming the vote result is yes. So shares outstanding as of December 15th, just shy of 275 million shares. Post-consolidation, that's 27.4 million shares. Warrants averaging 13 cents. As of December 15th, 80.5 million, call it, warrants. And then post-consolidation, just around 8 million. Options average 12 cents an option. As of December 15th, 19.2 million options. Post-consolidation, 1.9 million options. Fully diluted as of December 15th, 374 million, call it, shares. And post-consolidation, 37.4 million, call it, shares. So that's pretty straightforward. I'm not sure you do, Keith, but I want to give you the chance. Do you have any comments on this slide?
No, thanks. It's pretty straightforward. But again, my experience is that in North America, the North American markets, when we get a share structure above 200 million, or in this case, fully diluted above 200 million, it's difficult to attract investors and to achieve a reasonable financing. And if we raise money at this current level, for instance, we're proposing $3 million in a financing, would be a nice number. That would be 150 million shares at our current level of trading. So in order to raise reasonable money, we have to have a reasonable share structure, and I would fully encourage acceptance of this proposal.
Thanks, Keith. I'm going to go to slide number 5. So when we look forward to the Carolina Rush strategy, there's a 3-phase program. Phase 1, Brewer Mine exploration. So we're going to drill near surface gold mineralization, breccia hosted epithermal gold system. That's what we have. We're going to evaluate new gold zones, including on the west side of the pit. We're going to evaluate a second breccia pipe southwest of the former pit. And we're going to drill test porphyry copper gold drill targets and consider a joint venture partner. The system at Brewer is big and the potential is big. So we think that it makes strategic sense to consider a strategic partner, but we need to do some more exploration and some more drilling to help advance that objective. Phase 2, and that's in the middle of your screen here, Sawyer Gold Trend Exploration Program. Now, we have a slide later where we're going to talk more about Sawyer Gold Trend. It is a gold trend in North Carolina, which is, for people who don't know, it's just north of South Carolina, but it is a different state. Acquisition of projects within the Sawyer Trend with historical resources and or with well-identified targets that are Hale type gold. Hale is the big gold mine just down the road, 12 kilometers or 15 minutes in a car from Brewer, owned and operated by Oceana Gold Corporation. And we're going to explore and evaluate a 20-kilometer plus long trend of structurally controlled gold occurrences in mines. Phase 3, generative program and new targets. Explore identified targets, Virgilina IOCG, Pilot Mountain, Porphyroid Belt. Evaluate documented advanced argillic alteration systems of the Carolinas. Apply Carolina Rush strategic alteration model. Evaluate new Carolina Rush high-quality regional mineral and geological database. Keith, any comments?
Well, I just want to keep this brief and kind of summarize for those that may not be familiar with the details as we are. But phase 1, what are we talking about? This mine was in production for many years. There's lots of data, but Carolina Rush has only been here for effectively 2 years. So the unique point we're at right now is this. We have all that data. It's been put into a uniform database. Our geologists have studied it, applied some of the most advanced techniques to evaluate it, you know, alteration models, spectral data, integration, trace element geochemistry, all that sort of thing. And we've combined that with a very, very sophisticated, high quality geophysical survey. And for the first time in the history of the property, we have all that data in one place, and it's now ready to be tested. And that's the message that's often lost. People hear Brewer this, Brewer that over time, but right now is a very unique time. The geophysical survey has been completed. We have some outstanding results from that survey. It's been integrated with the known gold mineralization, and this is a very nice step, and we're just going to go out there and explore that. Second thing, the Sawyer Gold Trend, had some experience working in this region. It's a very encouraging looking area. Different style of gold mineralization, but we've identified several properties and have preliminary agreements in place. We hope to finalize those agreements very soon, bring those to the program, and expand into resource definition mode there quickly as well. Again, these are historic gold mines that have not been tested properly. And then phase 3, you know, the Carolinas have been parts of the scientific community for, you know, a long time, and there's a lot of data there. And our team has been looking at this data and has been to some degree evaluating the numerous occurrences that are out there And we now have a nice long checklist of properties we'd like to go after once we establish the foundation to do so. I hope that makes sense. Thanks.
Thanks, Keith. That makes a lot of sense. Before I go to the next slide, I want to kind of underscore and amplify just a little bit two of the points you just made. The first one is the geophysical survey that we completed and that we issued just 2 days ago on Tuesday, a news release about. So I'd encourage everyone, if you haven't already, check that out. It's on our website, talking about our dipole IP induced polarization survey. So that's something you mentioned there, Keith, and just saying that that's been very valuable for us at a technical level, and it just enhances our overall knowledge set of what Brewer is and where we need to go and how we need to proceed in terms of exploring at Brewer. But then the second point I want to underscore that you said, which kind of leads from that, is this idea of the power of data. Data is everything. And I mentioned in my opening remarks about how we use science. And that's a key part. We use prudent management and science to help minimize risks and maximize opportunities. And at the heart of science is data. And I'm very proud of the data that we have compiled and the model we have built at Brewer. But what really, I think, has happened in a really cool way is that the more we understand Brewer and the more that we look and understand the region, the more we see potential connectivity in terms of model with Brewer and other potential targets in the region. So that's a reason why we want to expand the scope to be more regional, is because of the confidence we have built around the Brewer model that we've established and the compilation and the soon-to-be acquisition of a lot more data. So data is power in this business, and we have very high quality data and a lot of it, and our plan is to get a lot more. And we think that that will be a very strategic part of our value proposition. This is slide number 6. Now, this slide, I think, we've shared this before in presentations. And if you look on the left, you will see a little star and it's pointing to the Carolina terrain. I'm going to ask Keith to talk more to this slide. It's a technical slide, but the heading there is geologic setting of Eastern North America, favorable geology, prolonged tectonic history, major gold deposits present. Over to you, Keith.
It's a pretty big subject and maybe beyond the scope of today's little discussion, but fundamentally, this is a major tectonic belt that extends the entire coastline, east coast of North America, not unlike the metallogenic terrains or deformation zones around the world. And as you can see, parts of it are eroded and covered by coastal plain, but down here in the Carolina terrain, there's a very large area of potential mineralization with hundreds of occurrences. And that's what we're looking for. I think the next slide is more important. If you can jump to that. It's
yes, sir. I'll just let you keep talking, sir.
Oh, actually, I skipped ahead. Well, this I lost. I thought we had the.
You mean one in the appendix?
Yeah, I'm sorry. That's my fault.
No, let me go. Let me go. Is it this one?
Yeah, this slide demonstrates the significance of that terrain. That this is a compilation of the porphyry, copper, and gold deposits around the world, prepared by two of the world's foremost authorities, Jeff Hedenquist and Antonio Arribas. And clearly, you can see we have the same characteristics of the world's major porphyry belts, and we believe that Brewer is part of that same kind of system. That's really the one I wanted to point out. And if you go back to slide number 7, this is a very nice slide that demonstrates all of the data that has been compiled from the Brewer mine site. And again, this is a massive amount of data. We don't want to talk about all of it. But what it boils down to is, again, in the last 2 years, all of this data has been put together in the same place. It's been evaluated. The geology alteration, mineralogy has been studied, and some drilling's been done. And when I first joined the program, the drilling was basically being conducted in a very logical manner. We're just drilling out the bottom of the pit, and lo and behold, you drill a hole into the bottom of this gold mine, and mineralization continues for considerable depth. What I recommended, though, was to stop and compile this data so that we could come up with a more systematic plan to evaluate potential for a large deposit. And so several of the early holes were spectacular here, like shown on this slide. 21C05 had 181 meters of mineralization. 21C08 had 106 meters of mineralization, over a gram material in the hole. So what we've now done is compile this. We stopped the drilling program in order to complete this aspect, and then sat back and said, well, what do we need to predict the future or the extensions of this mineralization? And that's when we recommended an IP survey, which is summarized on the next slide.
All right.
And so this was on the subject of the news release put out earlier this week, and suffice it to say, there's two major features to point out here. One, the alteration zone here is very well defined, and it's very large. It's the scale bar on the bottom of the slide shows 250 meters. So this is about 2.5, 3 kilometers in diameter of very pure, strong alteration. And within the alteration zone, what we're looking at on the left is, these are nice complicated words, polarizable resistivity anomalies. The red is the target area, but fundamentally what we're saying is polarization means there's disseminated minerals that we're looking for, sulfides, and resistivity means it's in quartz or highly resistive rock. And then, so we're looking for silicified rock with sulfides, and this thing shows a very strong anomaly on the west side. And then on the map on the right shows what we call polarizable conductive. And in this case, excuse me, we've got non-silicified rock with sulfides. So the combination of these two products has given us a platform to go and identify 4 major target areas. And this will be the subject of another call sometime when we have a chance to discuss the geophysical results with a geophysicist, which I'm not. So that's about all I want to say, Layton.
Okay, thanks, Keith. I'm just going to keep going to the next slide, slide number 9.
Yeah, and so this is relates to the third item we referred to earlier, the potential for other targets in the slate, well, the Carolinas. And what we've showing here is simply, this is intentionally vague. It's a summary of the geology, summary of the known copper and gold occurrences, and a summary of our favorite target areas that have been identified, and variable levels of work has been done on these. These are the things we hope to pursue with a future budget.
Thanks, Keith. There's a lot of information on this slide, so I just want to kind of highlight. I don't know if you can you see my cursor moving here, Janie?
Yes, I can.
Okay, so this little red dot in the legend here says gold occurrences. This blue dot says aluminosilicate occurrences. So then I think that's just relevant to understanding the slide a little better if you're not a geologist or a technical person. And then you can see here kind of faintly in the background where my cursor is, that's the state boundary between North Carolina and South Carolina, and Brewer's right here. And then this is the boundary down here. This is the state of Georgia. So if you now look at these red dots, okay, you see a lot of red dots. Those are gold occurrences all up in here. And then the blue aluminosilicate occurrences, which can be associated with copper. You'll see kind of a few down here, and then right at Brewer, you see a lot of red and a blue. And then you kind of go up here, you see here some more blue and more blue. So again, that's a non-technical comment, but I just wanted to underscore again, all the things we've been saying today about potential and data and strategic targeting of priority targets. Keith, any comments before I go on?
Again, I think we want to get to the question and answers here, but fundamentally, this concept of aluminosilicate alteration is pretty high science stuff, and I don't think we want to dwell on it. But the next slide shows a historic map that points out it's not aluminosilicate occurrences. These are areas of very intense alteration that are consistent with possible porphyry environments, and this is well known information, but our experience at Brewer has elevated our understanding of these systems, and it gives us gives you another round of ammo, a totally new perception on what these things mean. And that's why we want to go out and look at these things. Take
Thanks,
another look
Keith.
in.
That's really well said. Again, I just want to highlight here, this is an historic map. We did not produce this, and you can see down here, this is from 1978. So Brewer's listed on this map, as well as a lot of other targets. And you can see right here, as Keith was just saying, this high alumina alteration, this intensely alteration area throughout. All right. This is our final slide. We do have some slides in the appendix, as you've already seen. But after this, we'll take the Q&A. So conclusions and key aspects. Brewer targets are highly prospective. All data has been assimilated and evaluated. Joint venture strategic partner potential accelerated. Sawyer Gold Trend exploration program. New target concepts. There hasn't been much, if any, modern exploration. Resource definition and expansion, regional trend exploration, and great regional analogies. And the third column here, and I'll let Keith make some comments on this slide, generative program and new targets. It's an opportune time to be focused in the United States. We're taking advantage of decades of prior analysis. We have and continue to produce an advanced regional compilation and interpretation based on data. And we are strengthening our intellectual capacity on our team. Keith?
Yeah, I think for me, the major takeaway from this is that what I visualize as the program including is, these are three categories, but what these are going to do, they're going to combine to provide a very steady flow of positive news and results. Brewer is the most advanced, and it's certainly the easiest to identify high-level targets for drilling. Well, we're going to combine all of the opportunities in these categories and come up with the most logical approach that is both cost-effective, but lends itself to a positive amount of news flow that will continue to advance the program and certainly advance our attention span from shareholders. But fundamentally, Brewer, we can develop near surface resources, but we also have the potential for a very, I don't want to use a word that's too strong, but there's very good potential here for a significant copper gold system at depth. And that's a very attractive target. So we'll combine those two into a future drill program. The Sawyer Trend, I believe, is going to be a very easy area to demonstrate this near surface oxide gold resources. Again, we will be converting these properties into resource quality projects, which will enhance the value of the company. We will combine those systematic programs with the development of new targets. And again, advancing the best targets first and as aggressively as possible. But I think the big message is these things will all be done together in sort of concert. We'll be working with Patrick Quigley, the exploration manager, to optimize all of these things and come up with the most effective way to develop a very positive stream of news over the next year or two, is what I visualize.
Thanks, Keith. All right. We are now going to pause. I believe we've gone about 40 minutes. We have a 1 hour window, and Janie, I was going to kick this off by asking Mr. Don Blythe of Paradigm Capital to start us off with the Q&A. And is Don around? Is he unmuted?
Yes.
Can you hear me?
We
Yes,
can hear you,
sir.
Don.
Excellent.
How you
The
doing,
technology.
Don?
Excellent. The technology works. Happy New Year, Layton, Keith, and Janie. Certainly an interesting concept you've started to outline here, and language of your press release suggests a lot more news to come. Just a bit of disclaimer for others on the town hall call. I am a mining analyst with Paradigm. I do actually cover Pancon, and I'll say when I look at an exploration company, first things I look for are good geologic potential in a safe working jurisdiction and a decent management team. You guys checked all those boxes. The assets you control absolutely do not jibe with the small market cap of the company. I think one of the biggest obstacles has been the complex nature of the Brewer being a Superfund site and the unusual option agreement. You have the right to acquire and own the property outright, but a big sticking point is the final purchase price of that is not known. You've given sort of indicative ranges, but have you considered doing the work or getting the EPA and or receiver to assist in sort of more formally determining what that final price might be?
Yes, thank you for your question. So a couple of things. We have a very healthy working relationship with the receiver, the Brewer Gold Receiver, and by extension with the state of South Carolina and with the EPA. Secondly, we have understood from the very beginning here that the seller, the EPA, is a very willing seller. They have determined that they no longer need to have this in the Superfund program, which itself is a positive. And their main interest is to, frankly, no longer have responsibility for the historic liability here. Now, it's important to note that for the past 20-something years, they have been able to manage this site very, very well. And it's a pretty straightforward situation where there's water coming out of the ground that's full of metals. And so it does have acidic properties, but guess what? Those metals, some of them have value. But to date, the approach that has been taken is to see that as a risk or as a liability. And quite frankly, our company, now that we've been on the ground for 3 years, we recognize that water is potentially risky, but we also see it as having a positive side, not just a liability, but it could be an asset. So there are a lot of new modern technologies now, and there's lots of ways to think about controlling and managing that risk, that historic liability at Brewer, but also exploiting the asset aspect of it through technology and maybe being able to monetize some of those metals that do have value. So when it comes to the purchase price, you said this is it's not a conventional, is a traditional option agreement where you've got a known sale price from the beginning, because the price will be a function of discussions and negotiations with the parties, with the EPA, with the government. And the singular point of discussion will be, what is the appropriate cost to own that historic liability? And think of it as a bond, an environmental bond. And so I think that, frankly, while we don't have an exact number, we do know that the government proposed somewhere around $25 million to build a new industrial complex, frankly, a wastewater treatment facility, a very modern one. But again, that approach looks at the issue of the groundwater strictly as a liability and not as an asset. And so, I think that the sale price ultimately will be somewhere, it's hard to say, but it will be somewhere between $15 and $30 million. But there has to be a lot of further research and negotiation, and we have until the end of 2030 on the option. So that, I think, is an ample amount of time. And the fact that we have that amount of time is actually a function of the very first point, which I just said, which is we have a very good working relationship. And you can look at our news release from this past year where we announced that extension of the option period. So I think right now the situation is very positive for us in terms of the option agreement, in terms of based on our exploration work and hopefully our exploration success. And if there's a decision made to exercise the option, I'm quite confident, given the 3 years we've been working at this and the relationships that we have and the knowledge that we've acquired and our own study of potential technological solutions, that there will be a very positive outcome, Don.
Excellent.
Don, could I comment on that?
Yeah, Keith, go ahead.
I take a slightly different, it's a good question and thanks, but I take a slightly different view on this. I look at it like this, the South Carolina EPA has taken a view of this as saying the best way to treat this property is to bring in a modern mine. If we find what we're looking for here, the current wastewater treatment procedure will be of no significant concern of ours. The idea would be that this would be a sizable mine, and any good sized mine would have a modern wastewater treatment plant, and we will not have a surface water contamination problem. We'll have just a normal run of mine water treatment plant. Now, on the other hand, if we don't find what we're looking for, we don't exercise the option. We're out.
Keith, I love that. I love how you just said that. And that's an excellent point. And I fully agree with it. And it makes me think of the point that the Hale Gold Mine just down the road is a modern gold mine owned and operated by Oceana Gold Corporation, 15 minutes from Brewer. And it underscores that, and it's a big one. I think the proven and probable reserves as on the Oceana website are like 2.55 million ounces. But it underscores that the state of South Carolina is pro mining. It's pro gold mining. And that's a big gold mine. So exactly to your point, if based on our work that it looks like there can be a modern mine at Brewer, then I think we're actually very, very aligned with the interests of the EPA in the state of South Carolina.
Excellent. Certainly, the work you've done, there's complex geology, there's indications of multiple phases of and styles of mineralization. And you don't have a resource yet, but you've certainly taken it from that conceptual, is there gold, to now, how much gold is there? I've always also liked this intriguing possibility Keith sort of touched on of the large, copper porphyry, copper gold porphyry type system at depth. That's been postulated for some time now. There's that USGS report from the 70s. Porphyry systems can be huge, tens or hundreds of millions of tons of ore, and mines that last for decades. That's a different set of skills for that kind of exploration. Typically, you need deeper penetrating geophysics than deep diamond drilling, which is very expensive and beyond your capability at this point. If you were to find a corporate that's more interested in, say, that big long-term copper potential, would you consider splitting the Brewer asset in such a way that a company could earn in on sort of just that part of the potential?
Keith, do you want to take that first?
Yeah, I'd be very happy to take that. Don, I've spent the last 20 years looking at copper gold porphyry systems, both from an exploration point of view and from an investment point for Sandstorm. And what you say is very true. And I know you know this, but I'll say it for the public here. These type of systems, as you say, are huge. And the most exciting discoveries of the last 10 years have been in exactly these type of environments. So you look at things like Oyu Tolgoi or Red Chris up in BC, and deep, big, rich copper gold porphyries have been discovered underneath these systems. The beauties of this is that they're underground mines, which is easier to develop in an area like South Carolina. But suffice it to say that we are actively engaging with large companies that are experts in this type of development, and we would definitely consider a partnership or splitting it up, as you say.
That's great. Pancon obviously already holds regional property surrounding Brewer, owns it 100%. Your press release, your talk of Carolina Rush being the new leading explorer in the southeastern U.S. Phase 2 and 3 shows a lot of potential new stuff, projects and databases. Obviously no costs mentioned yet. I'm assuming Brewer is still the flagship asset. So how are you going to be splitting the resources between Brewer and the new opportunities? And I'm also assuming you would avoid doing deals on new properties that would require a lot of significant upfront costs and or minimum expenditures over the next couple of years.
I'll comment, and then I'd like Keith to chime in, please. just very briefly, yes, Brewer is our flagship. Brewer is our priority, and I hope that that message has been reinforced in today's presentation, as we've said. But also to your point, Don, Carolina Rush, the name is intentional. And the screen, the map we showed on the previous screen, we are very cognizant of the potential at a regional level. And the last thing I'll say before passing it to Keith is, in the past 3 years, and frankly, Pancon first came down to the Carolinas in the middle of 2016. So, I'm not great at math, but that's more than 6 years. And so over that time, we have built a lot of relationships with a lot of people, and we've gained a lot of knowledge. And so when it comes to not only knowing where there are good targets, we also feel like, frankly, from a commercial perspective, given our presence in the region and the fact that we're based there, is that we also are intending to be very, very mindful of cost and keeping cash costs down when it comes to any kind of expansion of our portfolio, and to really, really focus on exploration and not overheads.
If I could just quickly add to that, your question is excellent, and definitely I have learned that over the years that it's a good way to ruin a program. But fundamentally, when we look at Brewer, we're at a point now where gold resource definition can be a very cost-effective activity. The targeting's pretty clear, the work's done, it's a matter of drilling, and we can manage that very effectively. And in this environment, drill costs are very low compared to most places. The Sawyer Trend properties, we're looking at, again, projects that we anticipate reasonable acquisition costs. We don't want to disclose anything now, but they are very reasonable. We're very mindful of that issue. But more importantly, converting what is potential now to resource is going to be very cost effective. And so that level of exploration is going to be very cost effective and will produce results rapidly. And as far as acquiring new projects under the generative program, we've definitely got to be mindful, and we've got quite a bit of experience with these various avenues, which don't care to disclose right now, but certainly our group has a benefit to a newcomer in the region. Thanks.
Excellent. And then, I'd say sort of corporately, you've suffered a bit from the complex option agreement and frankly a pretty crappy market for early stage exploration companies. Your share price languish makes it hard to raise funds, becomes a catch-22 where you need to drill to advance this, and your share price isn't going to go up unless you advance it. I think we've both seen a lot of companies that rename themselves, do a share consolidation. If there's not a significant catalyst that goes with that, within a year or two, the share price will be back down to where it was pre-consolidation. Confident you both are fully aware of that. Does sound like you got a lot of catalysts, but perhaps you might be in a bit of another catch-22 situation where you can't really get those catalysts off the ground until you fix the share structure first. Would that be a fair way of looking at it?
If I could comment, in my opinion, yeah, that's right. And again, I don't want to sound smug, but I'm only here because Brewer has potential to be a really big system, and it could be a game changer. You're right. I don't want to be in this spot in another year or two, but take a shot at it. If it is what we hope it is or what we think it is, then that issue will go away.
Thanks, Keith. Thanks, Don. My answer to your question is yes.
Okay. Yeah, it is a bit of a leap of faith for shareholders, but I think the important thing to say, which you did mention in your opening comments, is the status quo really isn't working. So definitely supportive of the restructuring. And then I'll just end off with a bit of an analogy, not a question. I met with a little exploration company 15 years ago that had a property nobody much knew about at the time, and that was Remarco and the Hale project. Now the Hale Gold Mine, operated by Oceana. Certainly learned a lot about the history and the geology of the area when I covered Remarco. I don't think I'm being too promotional by saying that Brewer could be the next Hale. Promotional would be saying it could be a lot bigger. Congratulations and good luck on the restructuring.
Thanks, Don. I appreciate it. And, you know, we've said a couple of times today, we've talked about, you know, complex geology, and I think Remarco and Oceana Gold would agree with that. But we also look what happened there. You know, I mean, that's an excellent gold mine and good for them. And that gives us quite a lot of confidence. But what it means is you got to have a real high level of technical capacity. So, you know, Keith just a few minutes ago said, you know, I'm here because of Brewer's potential. And I just want to underscore how grateful I am that Keith is here and he's really leaning in. And he mentioned Patrick Quigley earlier. And we've got a very, very strong, you know, we're a small company, we've got a very strong technical team, and that's going to be what it takes, as well as good discipline to be successful in this region. But we're up for it. Any comments before we go on to another question there? Comments from you, Keith?
No, I'm fine. Thanks.
Okay. Janie?
Yeah, so I just want to remind everyone again, if you are online and if you want to send in the questions, just click on the chat box on the bottom of the screen. Or if you want to ask your questions live, just click on the raise hand button as well. But in the meantime, I do have a chat, a question from Neil. In previous meetings, you talked about monitoring the backfill materials. Is that something that you can do without buying the property to aid in cash flow to avoid dilution?
Sorry, did you say monitoring or monetizing?
Well, talked about monetizing. I think it would be the question.
Great. Thank you, Janie, and the person who asked the question. Yes, we have talked about the backfill material, and I won't belabor, you know, get into all the details, but we were very mindful of wanting to understand what's in that backfill and how, you know, homogeneous the various layers when they did the backfill process were. And so we used the sonic drilling to do that. And this has all been documented. It's all been reported on. And we learned a lot of great information, and we learned about gold potential in that backfill. So yes, I think it makes all kinds of sense to monetize the backfill, period. The question, as I heard it though, is not just about that. It's about, can you do that before you exercise the option and own the Brewer property? The answer to that question is very simple: no. And so we have the exclusive rights to explore Brewer, and we do not have the rights to, beyond what we get from the ground, from the core drill or the sonic drill or the RAV drill, those materials, those samples, we're not allowed to, you know, start exploiting or extracting material.
Great. Are there any other questions?
Look at us. We're right at 1 hour.
Right at 1 hour. Well, thank you very much, Layton and Keith. Thank you, Dawn, and thanks everybody for attending this this webinar. We are recording this webinar, so we will make sure that everybody gets a copy of this in the coming day.
Thank you very much. Take care, everyone.
Thanks, everybody. Thanks, Janie.
Take care. Bye.
Thanks, Keith. Bye-bye.